Welcome to another exciting edition of the Trading Bell. Today on the program, we'll be talking matters publishing, and I'll be hosting Mr. Maxwell Wahome, the Chief Executive Officer of Longhorn Publishers. But before getting into that discussion, let's begin by taking a look at his profile.
Maxwell Wahome is the Group Managing Director for Longhorn Publishers plc, a position he has held since September 2018. He previously served the company as Chief Financial and Operations Officer, a position he held for 2 years. Maxwell is an expert in finance and strategy, having previously worked for over 10 years at PricewaterhouseCoopers Nairobi and Johannesburg. He also has vast experience in the manufacturing, service, mining and FMCG sectors. He holds a Bachelor of Commerce degree accounting from the University of Nairobi. He is a certified public accountant and a certified information systems auditor. He is currently pursuing a master's degree in strategic planning from the Heriot-Watt University, UK.
Thank you, Mr. Wahome, for joining us on the show. New look, new tidings for the publishing sector as well.
Thank you for having me, Abby. Say COVID-driven changes. Yeah.
Great to have you again on the program. And I mean, 2021 was a turbulent year for different organizations, especially companies that also have listed at the stock exchange. Just give us an assessment of how 2021 has been for the publishing industry. Where do you fall in this?
Okay. So first, just to give you a bit of background, our company runs July to June year end. So the last part of 2020 was, of course, a very difficult one, with most of the schools being closed for the larger part of 2020 and early part of 2021. Yeah. But I'm happy with the way the industry has adapted to these changes. Of course, certain things have worked to our favor, such as a resumption of the normal school calendar. Of course, it's a compressed calendar, but this has given us an opportunity to get our business on track and get back to get our heads above the water. So I'm quite positive about the way things are going.
All right.
Yeah.
Do you see any blip in how the business performed during this year where we saw schools having closed?
Definitely. With most of the publishing industry, I mean, like company, the biggest segment is education publishing. So when learning is disrupted, and it was disrupted for most of the countries that we operate in. The worst hit was actually Uganda, where they're still closed until January 2022. We saw a huge dip in revenues, but we started adapting to new ways of getting to our market through either online channels or through other means of distribution.
All right. Yeah. And as days go by, I know Kenya's education system was reopened, of course, very compressed terms. I've seen quite a lot of comment on this. But just walk us through how ICT became a key pillar for investors in the publishing industry. How do you leverage on this as an organization?
I think Longhorn was in a much better position when it comes to digital preparedness. So when the pandemic hit in March 2020, we saw this as a perfect opportunity to stress test our online platforms. So we offered a number of our online platforms for free so that we could first ensure that learning continues during this pandemic, but also learn more about our customers. So within a period of between March 2020 and April-May 2020, we saw a huge surge of new people joining into the platform. We had over 200,000 new subscribers coming in. Of course, the platform, we offered it for free, but we got to understand the trends, and this has now played a crucial part in the upgrades that we're now doing to our platforms, which will make our platforms now more stable, provide the value that our learners are looking for, and generate the revenue that we have anticipated.
And how big is the digital revolution likely to impact the publishing sector? Do you see any major opportunities in this front?
The opportunities are immense. I target that in the next 3 years, at least 20% of our revenues will come from digital platforms. And you can see that, you can see the signs. The digital awareness of our learners and our teachers has grown significantly since the pandemic started, which is a good sign. There are various other things that the government is doing to make the industry, the digital space grow in terms of broadband connectivity and devices. So I definitely see a huge uptick in the coming 1 to 3 years.
All right. And as you see opportunity in this, Mr. Wahome, how much are you looking to invest in your digital channels now that you're seeing a significant shift?
Digital is an interesting space in that unlike the traditional publishing where we were working alone, in digital you cannot make it alone. You need partnerships, you need a different financing model. So what we started looking at is how we can structure a venture studio kind of structure where we allow outside investors to come and work with us in growing separate digital ventures. You've seen globally some of the biggest tech companies have had to go through several rounds of fundraising to get to the level that they expect to be. So I do not expect to fully finance the digital growth from our internal cash. I will be allowing investors to join in, and we grow separate digital ventures that we can spin out from the main entity and they become separate businesses.
I like that. And I'll be taking you more on that as we progress. And getting back to our conversation around the enormous shifts you've seen in the education space. Of course, there's a competency-based curriculum, which has led to a lot of uncertainty in some quarters among parents, among learners, and you can always see Kenyans talking about the CBC, the kinds of assignments school-going kids are getting, and but the bigger conversation for me is how have publishing companies aligned themselves with this new curriculum, and in the event that this issue goes to court all the way up till it is reversed and we go back to 844, what is at stake for you guys?
Okay. So first I would say CBC, the competence-based curriculum, that train has left the station.
No turning back.
No turning back. That train has left the station, and it is indeed a good curriculum. One of the things that people should look at, what competencies are we building in these learners? When we talk about critical thinking, problem solving, collaboration, communication, these are very soft items or soft values that you are building in learners that will go a long way in building a society that is self-sufficient, very driven towards building the economy. So it is a new culture we are trying to build. And in such a situation, there of course will be resistance to change. I do empathize with parents who have to do one of these weird homeworks, build a scarecrow without any preparation.
Draw your governor.
You've gone through that.
Yeah.
So what is going to happen is all this feedback that you are collecting, we're going to incorporate it in improving the quality of the materials that you are preparing, and also dealing with these small teething issues that are there. Teething issues must be there. And if you recall, when the free primary education was introduced back in 03, there were many people who said it would fail.
Yeah.
But after a few years, we now believe it's the best thing that has happened to this country. So the same you can expect with CBC. There are some teething issues which the ministry is looking to streamline, and will make this system very seamless. For us as publishing houses and content developers, we are keenly listening to the feedback and improving on the simplicity of these activities that learners are doing, and making sure that every new grade that you go in, the complexity of the activities is much less. So there will be great times ahead.
Okay.
Yes.
So looking at CBC, so far what kind of shift has it put for publishers? Because in the event anything is reversed, I know for the publishing industry it's a major blow.
Mhm. So the publishing industry, we've actually invested a lot. And CBC, we are now halfway in the implementation. We are now going to grade 7. So that's more than halfway in the implementation. I would not want to anticipate a situation where this will be reversed, but you should still remember the fact that we still have the IP, the intellectual property, for the 844 books. The content is still there, even though we haven't printed the inventory.
Sure.
So whichever situation happens, I do not foresee a significant dent in our operations. But as I said, that train left the station. I do not expect anything to shift negatively. And the opportunities in whichever curriculum are there, because for us, we are looking at, we are a content business. So we look, the content that was still there even before needs to be improved. So I don't see a loss.
All right.
Yeah.
Allow me to take you back to a point you made earlier on about the future of the digital space for publishers. And as a country, we've been enjoying quite some major milestones, especially when it comes to fiber optic connectivity in the country, a bit of improved power access, even at the rural level. So we are seeing day by day some growth trajectory, especially when you look at equipping centers of learning. And the other conversation that goes unspoken about is, as we go towards the e-books, there's also the big challenge of piracy, which literally would wipe out opportunities for publishers like yourself. For instance, we are in the media industry where we have daily publication of a newspaper. We also have an e-version of the paper. What stops people from sharing the already put together content? What safeguards are you likely to be putting in place? Because it's a very volatile area in terms of just managing this content that you've put in a lot of work. And because I have my email, I can easily share with you a book. I can send it to you on WhatsApp. How do you safeguard this ecosystem and ensure that there's value for money at both the buyer level, at the publisher level, and of course, just ensuring there's data privacy?
Okay. So piracy will always be a risk, whether the physical book or the online platforms. But what we are looking at is solutions that are ideally more integrated, more intuitive, so adaptive learning. I do foresee a time where those ebooks will be free. And many countries are moving towards open content. So what we are looking at is what other solutions can we be able to build that will now be the value addition. That is what we'll be pricing. So whether the book is given for free, it will not matter very soon. What other solutions can we get? Can you be able to get the statistics, the learning statistics of the students? Can you be able to see what are the areas of complexity or difficulty for the specific learner? So that's the adaptive learning. That one you cannot get from a pirated book. So you need to be part of the system in order to enjoy the other services.
All right. And as we finish off, you did mention that the company is going towards partnerships and collaboration when you look at investing in the digital space. Yes. You are a listed company. Are we likely to see some activity at the stock exchange now that you've mentioned there's intention to go that route?
Yes. So at the last year's AGM, we got approval from our shareholders to incorporate a subsidiary in Delaware, which we've built with our partners in the US called Akili. So these are venture builders. We are looking at such avenues to be able to attract financing, not just locally, but offshore financing, the US market, people who are already steps ahead in technology. For Longhorn to be a successful education technology business, we need to attract partners who have the financial capability and the technical capability. When you look at the African landscape, there's no single education technology company that you'd say has dominated Africa. Longhorn will be that company. And for us to get to that level, we need investments, both technical and financial, that will get us to that level. So you will definitely be expecting to see a lot more discussions at our annual general meeting when it comes to structuring new digital ventures. And digital ventures are many that we can venture in.
All right.
Yeah.
And as we wrap it up, your strategic outlook for 2022, of course, we are still a few months into the new year. Yeah. What do you see in the crystal ball? Very positive.
It's a very positive. We've managed to successfully enter Cameroon in a big way. Year-on-year growth, I'm expecting double-digit growth. Very soon we'll be entering Ghana, where we've started developing content, and DRC, which is a very big market when you look at the number of learners that are in DRC. So those markets will anchor our growth in the regional space, coupled with what we're doing in the digital space. Now combine that with regional growth, I see a very positive 2022.
All right. Yeah. Thank you for...
With, of course, returns to shareholders.
Definitely.
Yeah.
Thank you so much, Mr. Maxwell Wahome, for speaking to us on the Trading Bell.
Thank you for having me.
And we look forward to having you on board in the near future.
Thank you.
Well, that's it for the first bit of the Trading Bell. Up next, we have market analysis.
There goes the bell, time for markets analysis, and today I'm joined by Melody Ndanu, research analyst at Genghis Capital. Many thanks for having you here right on the show.
Thank you.
You know, we just ended an interview with the publishing industry, that's Longhorn. I don't know, what's your comment? Are we going to see the stock getting excited now that, you know, I see schools almost fully now open?
Yes, I believe that now, because in 2020 there was the lockdown and because schools closed, and now as the economy is reopening, schools are going back into session, we're going to see some revenue growth in this counter. So it's just, we also saw that they released their results just recently and they were pretty good. So I believe going forward, this will give it the push.
Excellent. Yes. Thanks for that, and we really hope that, you know, we keep on that curve, because there was a lot of effect, especially during the COVID season.
Yes.
Now, generally, let's just talk first of all about the economy and how it's performing, because there's a lot of things happening. I don't know from where you see it, how is the market doing?
I would say the market is still doing well. However, we've seen that there's some foreign participation where there's been some outflows.
Okay.
However, I don't think it has gotten to the point where people are, let's say, concerned about the political scene just yet.
Okay.
So basically, foreign participation has been quite high on the outflow.
Yeah.
But mainly could be due to profit taking as people wait for the third quarter results for banks.
Okay, great. And I think we're still early to comment about the politics in the season, right?
Yes.
Excellent. I think there could even be more to talk about, because now the COVID situation as well looks like it's on a stable curve, I think, from what we're seeing from the government initiatives and the vaccination, right?
Yes, we've seen that the government has stepped up their vaccination efforts.
Yeah.
They're targeting about 10 million to be vaccinated. Still a way to go, but there's still some progress. So I would say even the hints that the economy is going to reopen soon, it might give bullish sentiments to investors. So just an observation to wait and see.
Okay. Let's talk about the indices, and there seems to be sort of like a normal straight curve. I don't know what's happening, whether there's still not excitement yet. From where you sit, what do you observe?
I would say that it's still no excitement per se. I think next year is when we're going to really see how the market is going to react to the election scene.
Yeah.
So for right now, it's relatively stable. We can see that because of market capitalization, that's what affects the price, the movements of the indices. For now, I don't think there's much movement.
Okay. But certainly at least it's on the positive side, so we are not worried too much.
Yes.
Let's get into now the gainers and the losers of the day. And I would like to open the session with, of course, the gainers. I see Limuru Tea, I see eGuards, Standard Group, Bamburi Cement, Crown Paints. I don't know, what's your comment generally on the gainers, and do you have any specific one that you'd want to point out?
So I'd say on the Limuru tea and eGuards,
Yeah.
we've seen that the tea prices have been gradually going up. Mainly this is due to the incentive of the government, where it's going to cushion farmers by giving a minimum reserve price.
Yeah.
So you could see that also because of the dollar strengthening against the shilling,
Okay.
you'd say this is favorable to the companies.
Okay.
Also for Limuru tea, earlier there was an announcement that Unilever was going to sell its stake to TICO.
Okay.
So it could be that the market is also pricing in this news.
All right. Certainly good tidings there. Let's get to the top losers. I see some names there from the Kabasi, Kenya Power, BK Group, Home Africa, quite a number of them. I don't know, what's your comment on generally the losers? And I see we can probably say a comment or two on some of the specific ones. Let's start with actually Home Africa. I don't know what's happening there.
So generally the real estate business has taken a hit because of the COVID-19 pandemic.
Yeah.
So you'd say that this has further aggravated the situation at Home Africa. Their financial situation is a bit precarious.
Okay.
So they're looking for either a strategic investor to come in and help to boost their capital,
Yeah.
or as well as the corporate bond. Unfortunately, they missed a payment on that.
Okay.
So that could also be a reason why it's facing this cash crunch issues. However, they've put in a turnaround strategy.
Yeah.
So hopefully this may help them to recover. They also have 3 billion in land. It's in its land bank. So
Okay.
in the event that it sells this land, it can also help to elevate the company.
Great. Comment on the Kenya Power. This one I know may
Well.
interest a few more people. Yeah.
Yes, so Kenya Power, I think we've seen all the news stories and the
A
articles.
lot of
that
excitement
have-
happening there.
Yes.
And I see the
yes.
government's hand is now in.
Yes,
Yeah.
so we're just hoping that the reforms will be done to actually help to push this company out of its financial situation. We've seen the IPP program, where it was found that they were quite expensive,
Yeah.
and now they're going to renegotiate these contracts.
Okay.
Also, there's the aspect of reduction of tariffs. So we're just going to wait and see how this affects the company.
Yeah.
Remember also IMF, they had listed this company as one of the ones that are supposed to undergo reforms.
Yeah.
So if it does go under reforms, we might see some positive movement on this counter.
Okay. Maybe a comment as well on capacity investments. I see them as well as one of the top losers.
For Cabasid, we can say that we haven't really seen any new news. However, there was a moment where they were supposed to acquire BOC. Then that deal has been taking a bit of time. So it could be that investors are just being a bit cautious and waiting to see what happens on this counter.
Okay, excellent on that. Of course, there's one stock that I would really want to dwell on the top losers. I see BK Group, and the reason why I say it's quite specific to me is because it's been one of the best performing stock over the time. I don't see a very significant change, but probably there's something happening. I don't know whether you have observed something.
For what I've seen is on most of the banking counters, mostly right now they're going through price correction.
Okay.
Remember that Q1 and Q2 they had some really impressive results. So it could be that now the market is just correcting back, and also they're just waiting to see now the Q3 results, what happens.
Okay, all right. Let's jump straight now to the top movers. Of course, most of them are the usual culprits. We can see Safaricom, Cooperative Bank, Kenyan Equity, EABL as well. I don't know what would be your general comment on the top movers.
So I'd say on Safaricom, as
Yeah.
we've seen, there's all news on Ethiopia, as well as now its strategies. It wants to introduce smart meters
Yeah.
for the public water companies, as well as for Kenya Power.
Okay.
So we can see that they're trying to diversify their income as well.
All right.
And also there's a fact that, remember that the government had put in measures to curb the use of physical cash. So some transactions were not being charged, but now because this year those measures were removed, you can see some revenue growth here on
Okay.
Safaricom.
All right. Any other company you can comment on the top movers?
I would say EABL.
Okay.
We saw that there's been some
Is it because of
news
the
on
relaxing of the curfew?
yes, yes, we've seen
Yes.
that bar owners are really requesting for the hours to be extended. So this in itself is going to push the price of the counter upwards.
All right. There you have it. Let's jump into the fixed income sector. I don't know whether there's anything for our investors and our viewers to observe, especially in the bonds industry.
So in the bond market last week,
Yeah.
the secondary market declined, but that could also be attributed to the holiday that was on Monday, and also due to the T-bills. They actually performed better. They were from around 40% to 70%. So you could say that investors now are looking at near cash as they look at the uncertainty in the market.
Yeah.
They're preferring to go to shorter term securities
Okay.
as just a way of hedging on the ongoing uncertain environment.
Okay. All right. Maybe to close this, we can talk about the shilling. First of all, I had you mention a little bit that it's still on a fighting path. I don't know.
Yes,
Yeah.
so it's still under a bit of pressure. We've
Yeah.
seen that now as the economy is opening up, there's more demand for the unit from importers, so that's pushing it up as well. As also there's the issue of increasing crude oil prices and basically the shilling is just under pressure. So
Okay.
yeah, that's
Whoa.
the issue.
All right. Okay, so Melody, I don't know whether you have a parting shot of what to look out for the week, or what's your advice to investors?
I would say invest in fortress stock counters. These are counters that are financially sound, counters that, let's say like KCB, Equity, we've seen that their balance sheets are very strong. Also with their diversification strategies, you've seen they've gone into new markets that are proving to be quite profitable.
There you have it, and we go right straight into your questions. And the question we have today is from Kaylee asking, what stock should I buy? That's a broad question.
Okay, that's a very broad question. So it depends with what you want. Are you seeking income, or are you going to look at the opportunities that may come for capital appreciation?
Yeah.
So for income, you look at stocks that pay dividends. Capital appreciation, mostly you can say it's stocks that you can see there's a volatility in the prices. However, you can start, you don't need a large amount to invest. You've also seen there's a program for Bonga points. You can redeem your Bonga points and buy shares with that. So I'd say those are the things to look at. Also, you need to look at the fundamentals of the company. How is it doing? Is it facing financial distress? Are they managing their debts well? How about their revenue? So those are things to look out for when you're deciding which stock to invest in. Also illiquidity.
Oh.
Liquidity is very important. You might
So there's so many factors, maybe we could advise Kelly and tell her, please go ahead, look at the NSE, channels. There's a lot of conversations about, what's a share, from what to buy, and what to consider, and all those factors that have just been mentioned here. This could take a whole show, but thanks a lot for your question. And there you have it right here on the markets analysis. Thank you so much for your valued company. I hope you gained a lot from our first interview with Longhorn CEO, and of course this market segment. And from us here is to really ask for your feedback. Let us know any questions you may have, and your feedback as well from the social media handles appearing at the bottom end of your screen. From us here and the team, it's bye-bye for now. See you next time, same place, same time.